Hello, welcome to this Ned Davis Research Vodcast, where we will help you see the signals. My name is Brian Sanborn, NDR's Global Head of Investment Solutions. In this episode, we'll be speaking with NDR's Chief Economist, Alejandra Grindal, about the US and Chinese economies. Alejandra, how did both economies perform in the first half of 2025?
Thanks, Brian, for having me. Definitely a big topic of discussion. These are the world's two largest economies, so definitely worth focusing on. So if we look at China's economy, it did soften a little bit in the second quarter. So we actually recently got that data, but it wasn't nearly as much as initially feared, just given the size and the uncertainty associated with US President Trump's tariffs. In fact, real GDP grew 5.2% in Q2 from a year earlier. This is down from Q1's pretty strong 5.4% pace, but still greater than the government's growth goal for this year. On the other hand, the United States, if you look at economic sentiment in the US, it's actually lagged most other parts of the world, so falling below expectations. Many measures of economic confidence, so this includes ranging from investors, from economists to consumers, they took a hit amid the heightened political uncertainty we've seen from the current administration.
So on that note, then, how does the second half of this year look?
Right. So first, to look at China, one thing that we've been looking at for quite some time is just domestic demand, and it just remains an issue. Retail sales are still growing at about half its pre-pandemic pace, and this is with stimulus. And then the real estate market just remains in the doldrums. And while it's off its cycle lows, in recent months, we've observed some stalling. More stimulus, especially on the fiscal front, we think will be needed if China wants to eventually meet its growth goal for this year. Now, in the US, it's had fewer positive surprises than the rest of the world. This is something that I've alluded to earlier. And this was something very consistent that we saw in the first half of the year. But that gap has actually closed quite a bit recently. And if the tariff deals continue to roll in, sort of taking away some of that uncertainty, and the One Big Beautiful Bill Act starts to have maybe more of an expansionary impact earlier than anticipated, so maybe sometime this year, we could see some larger upside surprises in the second half. But our base case is still for slower growth in the second half of the year.
So you mentioned that although slower growth, the US could surprise to the upside. However, when we look at data such as the leading economic indicator, it's at its lowest level since 2015. What's driving that discrepancy?
Oh, yeah, it's a great question, and one we've received a lot from clients. So the Conference Board's LEI has historically been known for an excellent track record. And according to our analysis and theirs, it's been giving a contraction signal since late 2022. And as we know, not a recession ever came into fruition, or at least not yet, but that's been quite a bit of time. And this mostly has to do with just some unique elements in the post-pandemic environment. So this includes the index being quite heavy in manufacturing indicators, which just suffered large corrections in the post-pandemic recovery and was offset by a growing and much larger services sector, which has been quite strong. We also saw an inverted yield curve and consumer sentiment dip, and that was distorted by high inflation. Incidentally, not all, but some of these factors do continue to give negative signals. Now, other measures that we watch, including the OECD's composite leading indicator, the Duncan leading index, the Brave Butters Kelly monthly leading index, and the Fiverr weekly leading index. So we look at a lot of leading indexes. They're kind of giving a different story now. They're showing levels that are consistent with economic expansion and just telling us that the US economy is far from recession mode at this time.
Alejandra, thank you for your insights. NDR clients can read Alejandra's research notes in her Global Economic Focus publication. The indicators Alejandra and the research team developed for our subscription service are also used in our model portfolios, which are available for direct delivery on TAMPs and as ETFs. For more information on NDR, we encourage you to visit ndr.com. Also, for those listening in audio-only mode, video versions, including the charts of See the Signals, are available by going to info.ndr.com/ndr-signals. Thank you for joining us as we help you to see the signals. So long.